And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here with Scarlet Fu, taking you through to that closing bell with a global simulcast. It starts now. Tim Stenovec in the radio booth. Norah Mulinda in today for Carol Masser as we welcome our audiences across all of our Bloomberg platforms, Tim, including YouTube on a day where all eyes are on the Fed, all eyes are on that economic data, Tim Stenovec, and all eyes are on some big earnings coming after the bell out of Interactive Brokers.
That's one of them. Netflix is another one. We're going to wait and see what we hear from Netflix in just a few minutes. But a real risk-on day where we could see a new record, depending on what happens in the next 2 minutes, on the S&P 500.
Yes, risk on day certainly, but we did see healthcare as the worst performing sector in the S&P 500. A little teaser for some of the decliners to come. Real estate is the second worst performing sector today as well.
And just a quick note as well that Congress is making progress on Crypto Week, right? We had the market structure bill get voted on and move on. So, they are moving forward with things. Bitcoin not getting much of help from this news. It's still down about 0.8%.
And this gets to the ideas. Is this basically a risk on market? I know it's getting kind of a grind higher, but when you look at the day-to-day moves, Tim and Norah, it just seems that is the case.
Yeah, it really does. I was saying the tone of today's trade is so much different than yesterday, where everybody was so focused on what happens with Jay Powell. That's kind of in the rearview mirror at this point. You got Pepsi earnings, you got United earnings, driving things higher.
And I'm glad you brought up Pepsi, because that was quite the surprise, a pleasant surprise, but quite the surprise nonetheless.
Is it the poppy? Do you guys drink a lot of poppy?
No, it's too much fiber.
Okay.
Fiber?
Yes, all those little things.
We were debating Olipop versus Poppy
Don't
here.
get me started on that. So,
Strong opinions.
All right, let's move on here. Of course, we are setting up for those earnings out of Netflix, waiting for that to cross as we see green across the screen with the Dow up more than 200 points, or about a 0.6%. The S&P 500 closing at a fresh record high, right around 6,297 and change, up about 0.5%. The NASDAQ composite adds 153 points. The NASDAQ 100 adds more than 170 for a fresh record high for that index, and the Russell 2000, believe it or not, that's your outperformer, adding 27 points or 1.2%.
All right, some optimism around those small caps. For those mega caps, though, and those large caps, the S&P 500 saw 373 stocks move higher, 127 stocks move lower.
And a pretty lopsided divide here in terms of the sector performances as well. 9 out of the 11 sectors finishing in the green. Financials and consumer staples leading the way, up 0.9%. Your laggard on the day is healthcare, down about 1.2%.
All right, well, very easy day for me to find stocks that moved higher. I want to start with the most actively traded stock today, Lucid Group, the electric vehicle maker, up 36%. They rose the most intraday ever. Investors learned that Uber is making a $300 million investment.
Now crossing the wire right now, Tim. My apologies here. 2Q EPS. We're going to start with the bottom line here. Coming in right now at $7.19 a share. That is a beat. The street on average was looking for $7.08. The company said operating income came in at $3.63 billion and revenue on the top line $11.53 billion. So revenue rose, beat estimates. Profit rose, beat estimates. Gross margin, operating margin, expanded, widened in the most recent quarter. And here's your guidance for the full year. The company says that revenue will be in a range of $44.8 to $45.2 billion. That's above the guidance that it had previously given, above street estimates as well here. So it looks like a beat on the top and bottom line for the second quarter. The guidance for the third quarter and the guidance for the full year also coming in above expectations.
And it's worth noting here that in the statement, they say the revenue and operating income slightly above our guidance due primarily to FX, net of hedging, and the timing of expenses. So keep an eye on how companies play in fold in the dollar story, because the dollar's weakness, of course, in the last couple of months has really played a role here, especially for these multinational companies.
Stock up more than 40% going into this year, going into this report. It's pretty much doubled over the last year, adding about $250 billion in market cap. The company calling out in the second quarter Squid Game Season 3, Sirens, Ginny and Georgia Season 3, The Turnout, Secrets We Keep, and Tyler Perry's Straw, as well as Extraterrestrial, as hits that brought in viewers.
Hey, I just real quickly, I just want to go back to that revenue number for just 1 second, particularly with the guidance. They are making it clear in the press release that they have finally rolled out that ad tech platform. They did say that year over year, the revenue numbers that we saw for the quarter did include an increase in that ad spend or that ad take that they're getting. And they say that they expect that revenue from the ads business alone to double in 2025.
And Romaine, talking about the ad business, as we think about a lot of these competitors, of course, we got that news earlier that Peacock's streaming service, Comcast, which is Peacock, their streaming service, they raised the price for their ad tier service by $3. That's more than a 30% surge there. So it's going to be interesting to see how a lot of these companies shake out as we think about the streaming service more broadly here.
And you wonder, with these big gains in the ad business, whether they're going to make a push to get more people onto the ad-supported tier, because it seems like at some point it's going to overtake the subscriber business, the subscription business, as the key moneymaker here.
You know, we spoke to an analyst from Wedbush earlier talking about, going into this. And what she mentioned is that Netflix actually had quite a bit of churn, but they have those customers coming back. Right. So it's succeeding when it comes to keeping those people paying for that content, whether it's live content, whether it's sports, whether it's those one-off events like a Tyson Paul fight sort of thing. People, she said, are coming back for the content over and over again.
That's definitely what we heard through our interview with her. And it's really interesting, especially as you think about this being a space that's constantly evolving. We didn't expect sports and all these live events to be what people are coming back for, but you are really seeing them luring in these churners and actually getting them to pay a little bit more to get some of these opportunities and the content here.
And they talk about in the shareholder letter about leaning deeper into that live event space. Of course, they had the big MMA fight just last week. They have the Canelo Crawford fight coming up in the middle of September. And of course, that slate of NFL games that they have, including the Christmas Day doubleheader here. And that doesn't even get into some of the other things like the stand-up comedy and some of the other moves that they've made to kind of keep people in that ecosystem, not just coming in to binge watch the pre-made shows, to actually come in for those live events.
It's going to be interesting to see how they strategize what they do globally versus in the U.S. because even though they're so prominent in the United States, that growth prospect within the U.S. is really diminished, and the growth opportunity is really overseas. But the customers there, the viewers there, are not as profitable as the viewers in the United States.
I just want to remind everybody about how big Netflix has become. Remember, this is the company that invented sending DVDs by mail. It did the pivot to streaming. It saw that before anybody else saw that. It truly invented the category. Nowadays, on a market cap basis, it's bigger than Walt Disney, Comcast, and Warner Brothers Discovery combined.
Can I just go back to something that Scarlett just said, too? Because it's a good point, this idea, too, of the push that they've made overseas. And I know you mentioned, Scarlett, it's not quite as profitable, but they do see that, at least on the top line of revenue, the idea that it is potentially a growth driver. They highlight that in the press release. They highlight some of the Spanish language content they've had, and particularly with The Gardener. Obviously, the huge hit coming out of Korea and Japan. And now, of course, the big deal that they made with France to actually have live news broadcasts there from TF1.
Yeah.
As we were chatting earlier about some of these different contents that they have here, when we think about a lot of the shows, Squid Game is one that we have really been talking about. I'm looking at a BI note saying that management has really called out Netflix's second half of the year slate as, quote, a slight embarrassment of riches, given 3 of its most popular series will drop from late June through year end. So it's interesting to see some of their biggest products and what really gets people to come into Netflix to be called a slight embarrassment of riches here.
Okay, who's excited for Stranger Things versus Wednesday versus
Who's
Happy
not?
Gilmore 2?
Who's not?
Okay.
I'm
Guys,
excited.
I'm not.
Stranger Things,
I'll be honest.
no way. I mean, that was a great show when the kids were
for
cute
first
and
2
cuddly.
seasons.
But, you know,
It was
now
enough.
I want to see a bunch of 40-year-olds
Come on,
running
guys. Come on.
around.
You want to see that? Just watch our show.
But I am Happy Gilmore, too. I'm definitely all in on that. But have you guys seen K-pop Demon Hunters?
No.
No. Should I add it to the watch list?
Yes. Now.
Romaine, you surprise us
stop.
sometimes.
Tim could do the rest of
I
the
thought you were
show.
going to
Okay,
sell it.
so what? You guys were spending some good time talking about the international and the opportunity for international. But here in the U.S., the question that I have is about what it does with growth slowing down here in the U.S. and how much pricing power Netflix has to keep raising prices and get more value from the customers that it has here in the U.S. now that new customer growth has slowed down.
See, I never thought that we'd actually be working with a Netflix that had ads. So it's so interesting how you see this evolution here. People are going from just wanting to watch it all the way through to actually being willing to pay for those little cuts in between.
Yeah, you extract more value from a saturated U.S. market by pushing people to the ad-supported tier. And that in turn drives up the advertising rates.
Okay, stop pushing. Because it's like what? So it was $6.99, then they moved it to $7.99 for ads. I mean, I'd be happily pay for something without ads.
I have to skip the ads. I'm sorry.
Premium customer over here.
Yeah.
That's going up too.